I'm out of focus.
Barbara Stanwyck here again.
That's it. That's it. It's probably better if I'm out of focus.
Yeah.
Hey, what's going on, Joe? I'm
markets
getting set up here. Tell us
yeah,
about
markets
the
are cranking. You know, I mean, no complaints. All the equity stuff's going. Bitcoin's up. ETH's up. I think I was trying to figure out why, of course, and I think it's the European, the UK stuff in particular, kind of totally reversing the skids on the tax cut agenda they were planning for the the highest bracket tax cut. Yeah. So like now, I think they're actually going to increase taxes. So that seems to be being perceived favorably both in the pound and in what was the other piece? Maybe gilt interest rate, bond prices. Yeah, bond prices. So it seems like that might have been the thing that maybe gets everybody excited. I don't know. I feel like there's something else out there too.
It's interesting. All I hear is doom and gloom. It's hilarious, man.
It's hard not to in Twitter though, dude. I swear it's like half the people are, talking about Armageddon and you're like, what? And the other half are talking about, fudding on macro markets. The other half are fudding on crypto markets. And it's like whatever you want to see. It seems like not you. I'm saying.
No, I know what you mean. Yeah.
You see what you want to see, and it does sound all doom and gloomy. But are people that talk about geopolitical doom and gloom? I don't see it. I just don't see it.
Well, and what I see is, this is the line I hear over and over again from like economics guys being interviewed on podcast. Well, it'll never be as bad as 2008, but it's going to be very, very bad. And I'm like, well, okay, so we're not going to have like a collapsing banking system, but it's going to get close to that. What the fuck does that mean?
Well, I think what's good is it doesn't mean, the 2008, what collapsed was, obviously the price of real estate and all those real estate loans. So it threw people out in the streets.
Right.
So whatever I think that the doom and gloomers, it seems like it relates to a lot of sovereign debt type issues and, all the stimulus money that's pumped out the last 15 years or so and getting that out. But, I have a feeling that bloodletting happens at like the private equity sovereign wealth fund level, the high net worth level. It's not happening at the level of the people who couldn't afford the houses they got mortgages on,
Right.
So I think that's what they mean by not as bad would be the way I see it. But I think the dollar numbers are probably bigger, but this debt has to be unwound. And if everybody starts taking 50% haircuts on it to unwind it stably, well, they're probably still up 300%.
Yeah.
So I don't know.
I'm starting to hear this theory among macro people too, that basically what the United States has decided is they're just going to destroy everybody else and not give a fuck.
Well, which, I think that
isn't far from our past. So
well, I think that look, obviously if you're on the receiving end of it, you're not happy. But if you're a professional trader, you really should have seen it coming. DXY appreciation. You should have seen it. If you didn't see that happening, when interest rates start going up in one market, that's the preeminent risk-free investment. And it's paying, 5-6 times what you're getting in Europe. I mean, where's the big money going to go? It's not, You don't have to be a rocket scientist to figure that out.
Right.
So I don't see how they missed it. But what I did see was news over the weekend that the ECB, European Central Bank, is getting ready to start quantitative tightening. So hitting their balance sheet, what we talk about a lot here with the Fed. So, and interest rates have been, I think they're pricing in a 50 bips raise on their next cycle. So I think I see now, the Fed did say, look, man, we got to stop this now. And everybody has to adjust, and everybody's not adjusting. Now they're starting to adjust. So once those interest rates get more close together, I don't think you're going to see that as draconian impact on these markets. Because again, look at Brazil and Mexico; they're up against the dollar this year,
right?
So what are they doing differently? And everything I could see from the Brazilians is that that they started raising interest rates first. And there's some debate over it was a delayed reaction in the pandemic. They were late to the game on cutting rates, and so they were trying to get out ahead of the game on the upcycle. And a lot of people say the IIF, IMF guys all say that's why they're up. So it tells me it's interest rate game everywhere. So, but of course the U.S., our stuff reverberates everywhere, and I think you just have to think about it. If it is the platform, it is the ultimate layer one, basically, or layer zero, or layer negative zero, then when you reprice everything at the top, at the predominant holder, then it is going to have cascading effects, but it creates trading opportunities too.
Absolutely.
So the U.S. these guys are not that stupid that they're trying to tank the world economy. That does not work. I think the idea is that, it's to get control of inflation, but you're going to feel it soon in a year, 8 months. The exports start slacking off because the dollar is 16% more expensive this year to everyone else. And you're going to see things starting to equalize. So it's not in our interest to destroy everyone other than, people we owe money to.
Right.
So,
right.
Because you get to reprice that debt.
That's handy.
So I don't know. I mean, I think we got to take some tough medicine here. It is the way it is. But the U.S. incentive is not to take out Europe, let's say, or take out emerging markets.
Well,
it will come back to that.
The thing that these folks are saying is the U.S. figures they've got to save. They have the opportunity to save Americans or prevent them from feeling as much pain as everybody else, and they really don't have any choice. And so, at the end of the day, it means that everybody else takes a hit.
Well, what is a government responsible for? What is their fiduciary duty toward? It's to their citizens, first and foremost. So, we talk about this with corporations all the time, or with protocols and their investors. It's the same thing.
Yeah.
But what I'm kind of just trying to emphasize, it's not to our advantage, the American advantage, to have all the countries broke so they can't buy our stuff.
Yep.
That's the whole model, is that, we kind of make the high end stuff and services and product, and, you need high end economies to be able to buy that product. So that tells me we want other economies revving up. We want India and China strong. We want Germany strong because we want to sell them stuff. Germans the same way. I mean, they want to sell stuff to everybody. They're just kind of, in a particularly difficult spot right now. So, to me, I think that we want everybody developed so we can stay ahead in the high end stuff. The commodity stuff, let China have that. Let the countries that are kind of just starting to, I don't want to say just starting to industrialize, I don't want to insult anybody, but the ones that are kind of moving up the curve, let's put it that way, where they need those jobs. We won't do them here. We'll protest and complain and whine, but we won't do the work.
Sean said the assumption is that they are not trying to burn the world. Maybe this is economic war, and if the U.S. burns the world, it ends up better than China and Russia. So he says, I don't know.
Interesting point.
That's definitely something that could be happening. I mean, at the end of the day, if the U.S. can't afford to destabilize Europe, as you were saying, Joe, although Germany looks to be in a shit ton of trouble just because of the energy crisis. So who knows?
And then, in fact, of course, then they end up subsidizing all the sovereign bond issue, the sovereign debt issues of, let's just say, pick on Italy right now as one.
They say most of the EU is supported by what Germany makes. I mean,
I didn't. I saw some data recently. I didn't realize how big it was, to be honest. And so I could see having Nord Stream 1 and 2 and the other pipelines going to Germany. It then, is cheap energy for their manufacturing juggernaut. Yeah. So I could see why they wanted that and why there was how that was cascading through Europe and economic prosperity. So they've had to make some tough choices, but I think long game, they're going to be better off for it.
Yep. So you and I have been talking about, and I've been ranting for a couple of years now, that I personally believe that banks will end up becoming a primary source of crypto purchases, much less trading. And Mastercard announced today that they have tapped Paxos to launch crypto trading for banks. This is a trial run, a test run, and we're a long ways from it impacting existing centralized exchanges. But I firmly believe that banks will take a huge amount of volume away from centralized exchanges, or some banks will just buy Coinbase, Binance US, FTX US, whatever, or those exchanges, if they have the capital, will buy a banks, right? And either way, it's, to me, has always made the most logical sense that ultimately banks, as they were already, we're already taking our money and transferring it to exchanges. Why wouldn't banks want to have the revenue from trading as well? And it makes total sense, which to me does a couple of things. First of all, it completely, I think it grows adoption significantly if they make it a prominent. And again, I think we're years away from most banks having it, but it grows adoption because now in your trusted bank's dashboard will be the ability to buy Bitcoin or the ability to buy Ethereum, right? It opens the gateway to what you and I were talking about over the last couple of weeks, which is KYC via the banks, right? The bank already knows who you are. So if you're buying and selling crypto on the bank and then you transfer it out to a wallet, I would, and maybe you have to designate it as, hey, this is my wallet, or I'm sending money to somebody. But anyway, if you transfer out to a wallet, if they allow you to, now if you designate that as your wallet, then you've got KYC already attached to that wallet, right? Which then gives KYC to protocols who want to remain regulatory compliant in the DeFi world. I'm not saying this is absolutely how it'll happen, but to me, it makes a shit ton of sense, right?
Well,
it just makes total sense.
Yeah, when you, we might have even talked about this in the very first show, but I remember the thing we always chat about is the WIT Capital analog from Batten.com days, when they came out, with a model that was, essentially giving the little person access to IPO shares.
Yep.
And, I think they got a little bit Goldman Sachs money, $1 billion at one point, and, for like 10% of the company. And then they ended up selling it like 6 months later to Goldman Sachs for whatever, 20 billion. But I think it was because Goldman Sachs wanted to bank those customers, that WIT Capital had. And I see the same thing happening here, is that, we think about a Coinbase deal, like an acquisition by a bank, that, look, they do that deal not for anything that Coinbase really has. I suspect that there's better tech in the banks, to be honest,
right.
Just because I know how much they spend on R&D and tech, bespoke, huge amounts of money. But it's for the customer list.
Yep.
It's, all of a sudden, I don't know how many accounts there are at Coinbase. I suspect it's probably in the tens of millions. But bang, here's 10 new, millennial through Gen Z customers for the most part that maybe you don't have yet.
That's right.
So you get them into your wealth management programs, and you help get everybody, who needs it, financial planning advice and any compliance advice you might need, and boom, you're in there now. And then those assets are being, let back out into the market. I think it's very doable, Brad, because I think with Glass-Steagall being down, which is what sort of prohibited the banks from, doing investment banking type stuff after the Great Depression.
Right.
This opens the door up for, one of those divisions to be able to do this in a not too difficult way. So then, like you said, boom, now we have a big chunks of the crypto sphere, are going to be, declared as sort of, I don't know, safe zones or whatever from the regulators.
Right.
So once you're in there, then you don't have to worry about all the KYC stuff. You're already, it's already done. The whole system's, I guess, clean.
Yeah.
But I don't think that stops everything else, the exciting stuff from happening.
No, I don't think it stops everything else. What I'd love here, well, I don't want KYC. Let me just make that clear first and foremost, because it's a joke. And ultimately, I think it'll just be used to invade privacy and restrict usage. But if it's going to happen anyway, right? The ideal scenario, the ideal structure, if KYC is forced, look, we already have KYC forced upon us if we buy coins on a centralized exchange. We've already done our KYC, right? And everybody operating on a US centralized exchange has done KYC, or any of the major exchanges You're doing
Yeah.
KYC. You've already done it, right? So, that's already part of the equation. What I'd love to be able to see at some point is that if you want to play the safe game, right? You're buying crypto from your bank, or you're buying your crypto from an exchange, and you have now KYC'd in either place or both places or one place, whatever. There are a set of protocols that follow, all of the disclosure rules, all of the, they become SEC compliant, right? And they are welcomed into the sphere of banks who are trading crypto, but they provide, better than what the average consumer can get in the world today, opportunities, risks and opportunities. But there's like some level of education the banks are doing or the exchanges are doing, and people can actually get their wallet, put their money out there and have control of it. They buy it at the bank, but it's that connection chains through from the banks to those protocols. And then if you want to go journeying out, you're welcome to go journeying out and taking that risk, right? And maybe even if the SEC wants to make sure that they have washed their hands of the risk of the people who aren't SEC compliant, it's, hey, I agree. I understand the risks. I understand that these protocols don't disclose. I understand all of that. I'm cool with it. I sign here, check a box, boom, go. Leave me alone and leave them alone. That to me would be the ideal. I don't think that's going to happen, but that would be the ideal scenario.
Because look, when you do that too, you're kind of KYCing to them, or you're self-reporting. So
of course,
like, why not? That makes total sense.
Yeah, I mean, you're not KYCing exactly what you do there, because you could then, have money coming from elsewhere. But most people are going to take the easiest path, and the easiest path is, let me buy the crypto at my bank and let me transfer it to my wallet, right? So you're right. You're absolutely right. So anyway,
but that's a good thing, Brad. That's a good thing.
Yeah,
because then you can declare, like you said, you're like, because what is the SEC really all about? Well, the mission statement is to protect the investor from the little investor from big investor fraud or something. I mean, that's the statement. So if you acknowledge that, hey, I don't need that coverage, I'm a sophisticated investor, not necessarily accredited, but just knowledgeable of and sophisticated about crypto, then you should be able to waive your rights to sue and things like that over a protocol getting rugged or whatever.
Yep.
And then at the same time, then people who don't want to do that are like scared of it. They're operating in a safe bubble where the only way they can go is for the stuff that maybe is insured.
Yeah.
So that if there are rug pulls and stuff, it's insured against. But they're not going to go near anything that is anything like that. So I mean, it's not exciting, but it does give a safe place for the normies to play that don't get it.
Yep.
And it allows us to still do our thing, and then come back and exit on appropriate off ramps at that point.
Right. Now, Sean says it's a U.S. centric view. Maybe you trust your bank or government. Does that apply in Iran or Syria? I wonder. Of course not. Look, I don't think we can give up on this concept of independence and freedom to be your own bank, right? And to report your taxes when you report your taxes. Nor can we deny the fact that KYC hasn't prevented money laundering, terrorists, or pedophiles, right? I mean, it hasn't stopped that. So
it just catches them after
the fact, right? Yeah. But the crimes are still occurring. So totally agree, Sean. Do not want know your customer. I want people to be able to be independent and free to do what they want with their money. And, one of the things that's funny, I was thinking about this today, Joe. We get into this discussion about KYC and regulatory frameworks and blah, 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 and the risk and all that. But sometimes I forget and lose sight of one of the things that I was most excited about, which you just touched on. One of the things I was most excited about crypto was that it allows people to play in the world where only the wealthy have gotten to play in the past, right? And that to me is what's so important about it. And that whether that's investing in DAOs without being an accredited investor, or it's high stakes financial products, both of those things I think are absolutely crucial. And I want that freedom for everyone to be able to explore it and express it and have fun with it and learn from it and grow their wealth or lose all their wealth, whatever. I want everyone to have the freedom to do either one. So anyway, I do see a path here. Now, this is something else is, that Sean pointed out on Twitter today. His theory is that Ethereum becomes, becomes the, regulated irresponsible money. And he was responding to this tweet,
the 60% node thing.
This tweet about the SEC that I put out, wanting know your customer on Ethereum staking. Now, my reply was, I'm bullish Rocket Pool, because Rocket Pool is decentralized staking, no country, controlling it.
Mm-hmm.
Whereas Lido, Coinbase, Binance US, those are all US based, subject to regulatory, and you can expect that they will have to implement KYC. Rocket Pool will not, because it's a decentralized staking offering. So I don't think I can go as far as Sean goes, but I did say to him, it's getting more difficult to argue with this theory, because I think the SEC is going to say to themselves, well, we can either try to contain all this, or why don't we just take the biggest one and try to control it from a regulatory perspective to some extent. That doesn't prevent people from deploying protocols on it and doing radically decentralized protocols on Ethereum. But I also can see that this is a step that makes them feel like they've done something and shows an accomplishment for them, right? To say that we're going to say, if you are a US-based staking operation, we're going to do regulatory requirements on you. So I can definitely see that happening. Now, the question is whether the money stays in the centralized offerings, is the majority of the money that's in staking for Ethereum on Lido and Coinbase, is that mainly US people that don't care if they have to KYC? Is that institutional people who are already regulatory compliant, so they're fine with KYC? I don't know. Or is there a flood of money that runs out of Lido and Coinbase and Binance US staking and moves into Rocket Pool? At the end of the day, I have no idea, but it'll be interesting to see what happens.
Yeah, I mean, I share your opinion. There's just, in a lot of ways, I think there's just too much concentration there in the Ethereum nodes in a way that, I'm not saying from a technical standpoint or a governance standpoint, I'm just saying that makes it such an easy target to go after. And I feel like that Ethereum, I mean, I haven't really paid attention enough if anybody's actually said this, but it's the one that's most, as Sean says, it's most suitable to be in that commercial regulated network. It has, and what the volume we saw last time, the TVL volume, I think on Ethereum or what's in the smart contracts tied to it is 92% of the market or something.
Yeah.
So if you were going to commercialize one part and regulate it, that would be the one to go after. But what that tells me too is, and that other 4% is all the stuff we talk about constantly.
Yeah.
It's Phantom, it's Canto type stuff. It's, Zero VIX stuff. It's, Shardium, it's Aptos, it's all the new cool stuff that's going on. So I'm kind of like, well, if that's what it takes to keep the cool stuff going, and they're going to want to KYC some nodes, those are all pretty much big people anyhow, right? I mean, It's not a lot of little own 0.1 ETH,
Right. Well, what's the best approach in negotiations, right? You've got your extreme ask to get them to the middle. And then you have the thing that you'll give up, right? You have that thing that you're like, okay, have it, right? Maybe US-based staking operations with KYC. I mean, there's no central authority negotiating on behalf of Ethereum with the SEC, right? But maybe that's the thing that makes the SEC happy, makes them feel like they have a win. They can show Congress that Gary is doing his job, and they can represent it as billions and billions of dollars in crypto that they are now KYCing, right? And look, we're going to KYC at the banks too. That's coming too. We got that covered, right? That maybe that's their win, and then they keep going after celebrities that shill shitty shitcoins. Maybe.
Well, I think you go after the fraud at that point, because look, once you're in it, once they KYC that node, those holdings in that ETH node, let's say, that wallet should somehow then be designated wherever it is as clean in a way of some. I don't know how you would do it, but you know how they can blacklist a wallet?
Yeah.
Well, why can't you whitelist something that then the SEC doesn't worry about it? Just like if you go to your bank and wire 50 grand in another bank account, you get the wire triggers the reporting.
Yeah.
But nobody gives a shit because it's bank to bank.
Exactly.
So to me, if somehow, like you said earlier, this could somehow look bank to bank and nobody cares, then that's a good thing to me. It's like in the US financial system, it's not like we're all sitting only in bank cash, bank deposits.
Exactly.
People own houses and people own coins. I mean, hard coins, and they own crypto, and they own, all kind, cars. They own all kinds of different assets that fit into that mix. So it seems like it should be the same here.
Shizzy said Gary doing his job. Ha ha ha. Can we talk real quick? I want to note Sean constantly changes his handle and his ID.
I noticed that too. I like that.
Telegram and Twitter. I love this macro free zone. Sean does not.
I figure he was messaging us like, okay, dudes, we're tired of talking about macro.
That's fucking hilarious. Yeah, he probably changed it while we were talking. Stop.
I've seen a couple ones in there. Like he was doing something about the Frog Nation was his handle last week.
Oh yeah. Hey, quick.
And I was like, what?
I'm not going to get into it today, but I got fucking What Bitcoin Did, Peter McCormick's show. For those of you that do give a shit about macro, give a shit about how money works, or want to hear some awesome opinions about Bitcoin's role in it and not role in it. His last few episodes, Nick Batia, Jeff Schneider, just some really, I have learned so fucking much. So I would highly recommend everybody take a look at that show, at least the last few episodes, because there's just been some awesome levels of education. I think he's really upped his game of late. So highly recommend it. Sean says houses are NFT for boomers. He said best quote of the week. Did you say that? Did I say that? No,
somebody said that in the group somewhere along the way.
That's hilarious. Speaking of which, I haven't been in the Reddit all weekend. My apologies, guys. I'll get back in there. And Max Life, I owe you some replies. I'll get back to you as well on that other topic. Anyway, this was the article about the SEC wants to enforce know your customer on staking. What else do we have? Oh, I'm going to put a link to this. We don't have to get into it, but I talk a lot about product market fit. And this is a really, I think Jeff is at he's a VC. He owns his own venture capital firm. He's taking, so the idea of product market fit real quickly in Web 2 world is, you've developed a product, you keep having to change it, iterate on it, work on it, make changes in the features or the functions, whatever, until you hit like this sweet spot where customers are like, holy fuck, this works great. Right. And I started reading this article last night and I thought that it was going to be on this model of, because iterating in crypto is incredibly difficult. If you're using Solidity, right? It's incredibly difficult to make changes to the shit that you've already deployed. So it's not like you can put it out there for a few customers to try and say, oh, let me shift it after people are already putting their fucking money in it, right? It's a difficult thing to do. I thought he was actually going to address that, but actually in this, he has created a new term called crypto market fit because he doesn't feel like product market fit matches the way crypto has to work. So I'm going to leave it at that, but this is really interesting because he touches more on kind of the financial tokenomics governance models of stuff, but some really great learning insights in this. And I would encourage everybody to read it. It'll be in the show notes. We already did that. This article, I just love this headline. CFTC action shows why crypto developers should get ready to leave the United States. I can't deny or argue this, right? They're helping keeping a man in jail over Tornado Cash. I frankly, if I was a developer in the United States writing original protocols and deploying them, I'd be very concerned about my well-being and safety and freedom. So I don't know. There are only a few places these days that you could probably go and be safe, but I think there's a general consensus here that if you're doing something to help protect privacy or, enforce privacy in crypto, you're probably not in a very safe place right now if you're in the US. So what the hell? Did you send this to me? You sent this. UPS
yes, the UPS store in Decentraland.
What the fuck?
I'm always feeling bad for trashing Decentraland last week.
Wow. So well, dude, I mean, you want to talk about customer service? Like, if you're having trouble reaching a human at UPS, just be, if there's only 800, 900 people in Decentraland at any given time, go in and get support there. I love that.
Yeah. I mean, look, it fits in everything we talked about, though. I mean, think about all customer support operations for all these companies could be in the metaverse, or anything. I mean, these little rooms could take over like websites, basically,
Yeah,
functionality, and being the go-to place where you go look instead of going ups.com or whatever it is. You're just going into one of these
absolutely.
and doing everything. And that's what is so impressive. I tweeted something over the weekend about both Second Life and Roblox. I think it was in a follow-up article on Decentraland from Daft Radar. And it, how they calculate the Decentraland visitors. And, they're at like 8,000 a day or something. But the point is that Roblox has something like, I have to find the tweet, but it was like 54 million accounts or something. And Second Life has 70 million accounts still.
Shit.
And, and these are non-blockchain metaverse.
Yeah.
Or metaverse Psi or whatever.
Yeah.
But you just think when that type of that starts crossing over into what we talk about when we talk about metaverse, that's going to get real interesting real fast.
Absolutely.
And so to me, to Shizzy's point, I think we need to give these groups a little bit of be patient with them, because it is going to take time for more things like UPS Store and stuff like that to get in, because it has functionality then.
Yeah, makes
sense.
If
you build an NFT gallery of a wall to show your NFTs, hey, that's fun.
Yeah,
but it's not like it's, unless you're selling them there off the walls, it's not really adding a functionality thing. This is functionality. So
absolutely. Wait, I wanted to find didn't Shizzy tweet that us the Hive Minder thing? I was trying to find it.
I don't know if he tweeted or I think it was in my DMs. Hive Mapper, I believe.
Okay.
Which I thought was pretty cool. I think we've talked about it before, or it just sort of sounds vaguely familiar, but essentially it looks like they're going out mapping data like Google Maps did with visor or rear view mirror like dash cams.
Right.
And I was wondering, I thought, well, that's kind of interesting, because that could be content that fills these metaverses up too.
Yeah.
In ways where you're not having to license it from Google or somebody else.
Absolutely.
So, but I started wondering, hey, I think they have a coin. I can't remember what it's called, but I was curious, what if you could ever turn those like dash cams into miners in some way, shape, or form, where I think maybe the token's high.
Well, that's probably how you generate and mint tokens, is that you're taking that footage, right? I would assume that's how it works, but we should take a closer look at it. So thank you, Shivy, for sending it to us, and we will take a look. This is the CEO of Hive Mapper. Let's take a look at the website real quickly. Building a better map. I do remember us briefly talking about this.
That's right. Yeah.
The world's first crypto-enabled dash cam that mines honey and grows the map while you drive. Yeah, exactly. And this is actually a great concept, right? Because if you're driving around all day and you can earn money, especially someone who's an Uber driver or something.
Yeah.
I mean, that's friggin' phenomenal just to augment your income. And then there's all kinds. I mean, look, mapping data is hugely valuable. So if you can get a comprehensive map of the world with video around it, there's a ton of money to be made from that. And then I can imagine all kinds of projects around that, right? You have a developer community that's building tools for corporations, for governments, for whatever. And the data is open and available. There's all kinds of shit that can be, built on top of it. So I think that's really smart. I think it's
he also told me, I think that there's I don't know if it's an airdrop or something, but you basically are going to get something in the future of honey that's going to essentially equal the price of the dash cam.
Yeah.
So it really is going to jumpstart then. And I haven't looked at the token or anything at this point. I just like the business model.
Right.
So definitely one we need to keep an eye out.
Looks like it's in a limited test because it's a pre-order for the dash cam for $649, which is expensive for a dash cam, but
yeah,
I'm sure they're using a chunk of that to help pay for the business. But it looks like they have some kind of test going on because they've mapped 30,764 kilometers, 498 regions, 146 people doing it, right? So they're doing some kind of a test at this point. But that's interesting, really.
And lots all over the world. They have a lot of Malaysia and Philippines and other countries. It's not just all US or Europe.
That's awesome.
So you know how we talk about like in the genomic data, how it's so skewed to like European descent folk, where you don't have a lot of indigenous DNA or like, you know, African DNA or South American DNA, you know, or more South Asian now, but you just don't have all those pockets. Well, this kind of does the same thing in you know, digital mapping type data.
Sure.
Whereas you know, I mean, I haven't driven around with Google Maps and say Zanzibar or anything, but I would suspect that there's less data streams going into it than there is in, say, San Francisco.
Right. Right.
So we need to rebalance the data. So, because if you don't know all the data around the entire planet, then how can you really make accurate forecasting?
Absolutely. Absolutely. Niblets back on the metaverse says 100 million World of Warcraft accounts since it started. He said, get your orc to speak with the manager if you built in UPS. One other thing, it looks like Apple is going to release a headset, mixed reality. So I think augmented reality, whatever headset. I don't know any details, and I don't think this article knows a lot more details, but if you ever, this is a concept art, it's not the real thing, but if you ever, if you were ever going to make a bet on a metaverse having success that's not blockchain based, you know, a lot of phone users out there, Apple phone, iPhones out there. And if that's the driver, the technology that drives the headset, I wouldn't be surprised to see Apple
user adoption should be pretty good at that point, right?
Exactly. Thank you for saying it the way I should have said it.
Yeah, but you know, also look, when we were talking about the story earlier about the banks, you know, the first thing I always think about is Apple and the device itself,
right?
And how it is, you know, probably the most private of all the devices. And so, what if Apple Pay or whatever, or the banking side of it, you know, there were crypto accounts there. And so then when you go into the crypto world, you're kind of coming in from a gatekeep space already, you know, your phone.
Yeah.
So again, KYC requirements aren't necessarily needed. So, you know, all of this stuff I think is good. It kind of takes, you know, we're entrepreneurs. We like startups. We like bleeding edge innovation.
Yeah.
We like, you know, rolling the dice on big kills. And that's fun to us. But, you know, at the same time, you know, you have to keep the concern going, you know, keep the lights on money.
That's right.
Why not take what we've learned and help, you know, get some extra liquidity from all these new players coming in that are, you know, $1 trillion companies.
That's right.
I think it's positive.
Joe, did you read any of this games report stuff? Because I didn't take a dive into it yet.
I skimmed through it. Just tons of great detail in there, but
1.3 billion raised in Q3 by blockchain games.
Yeah, I thought that was pretty surprising.
That's a big number.
Yeah. But just, you know, anybody who's into games and blockchain, I recommend reading it. Lots of stuff. I don't really have a report to present on it.
Benji Bananas has 29,000 daily users. What the fuck?
Yeah, I mean, there's a lot of stuff going on again. And so, look, again, big communities of users.
Yeah, yeah.
So, you know, is metaverse and gaming the model that drives, say, DeFi and crypto?
Right.
You know, whereas so far crypto's kind of driven itself, but you know, maybe that changes here. Yeah, you know, and now all of a sudden you get some built-in momentum and energy where you have massive communities onboarding different types of crypto-related applications. I mean, to me, that's exciting.
Alien Worlds and Splinterlands have over 160,000 daily UAW registered in September. Gameta, a gaming platform first deployed on Solana, now running on BNB, over 1 million per day. Benji Bananas on Polygon, 29,000. And then the NFT markets, where Gods Unchained cracked the top 5 collections by trading in volume with over 18 million generated by its in-game assets. So lots of impacts across the board. That's pretty impressive.
Yeah, and they even bring in some of the exercise games too. They talk a little about Step In and stuff. So to me, I think that's where, you know, overall society is trending more and more to gaming, if not just because more people are gaming when they're younger and they grow up and they keep gaming. I mean, I still play Call of Duty sometimes, you know?
Sure.
And it's, you know, there's a lot of people in there.
That's right.
Playing.
That's right.
So, you know, all of the people escape. They go do something else. We talk about Second Life, even the legacy player. I mean, there is a ton of people in there doing stuff still.
Yep.
And crypto is so, it's kind of like in .com. Talked about this before when, I look at a lot of companies and it seemed like everybody was, okay, fax us this here, or, you basically went to the website and got a phone number or a fax number. You fax something and then they mailed you back the report or whatever. And, that was the internet. Well, of course, then it gets driven by a whole bunch of other things that are more about like applications that are built for the internet. Well, now I see all these games and metaverse, and damn, if it's not like backwards, but it's like crypto was built for those.
Yep.
Okay. And that's where we're all headed. So, it seems like there's a match made in heaven coming here of anybody that's holding right now or getting into the space where all that liquidity is getting ready to come pouring in and all those users. I mean,
it's true.
There's no guarantee, but that's the kind of trends I look at.
Yeah, absolutely.
It's a natural trend. I mean, people are going to back away from gaming to go what? Sit in front of the fireplace and listen to the radio and read a book?
Karaoke.
Shit ain't happening, man. Sorry.
Karaoke. Where's blockchain karaoke?
Yeah.
Sushi Swap has launched stable swaps and pools now live on Sushi. What I found hilarious is they actually put the horse emoji in there after the whole thing.
I think that guy's funny. I saw one of his tweets this morning, and he's just deadpan delivers stuff, man. It's like,
so he and I've had some DM chats, and then he invited me. He had invited me to his PR team's Telegram group, where what I didn't know was that he was also inviting some journalists, crypto journalists, into it. And so I did a little bit of they asked me what I thought of the statements that he put out. And I said, well written, to the point, covers the background, gives people insights, answers the questions. But, listen, I'm really glad you handled this so professionally. And I think it's about time. If I were you, I'd want to demand an apology from all the idiot journalists that ran with this story without actually finding out if it was true or not. But you're probably not going to be able to do that. So hopefully they'll apologize to you personally. Well, what I didn't realize was there was a bunch of crypto journalists that had run this story.
Oh, you trashed them right in your first. Hey, nice to meet you. You suck, basically. Brad out making friends.
It was fucking hilarious.
Fuck, that's funny, man, dude.
Yeah, I sent him a private message. I said, sorry to shit on all your guests, but
facts are facts, basically.
I'm sure he loved it coming from a third party. So,
well, look, he's there's something good there, and we always have liked Sushi Swap. They just kind of gone through all those rigmaroles of different leaders and who's doing what and this and that, and I think this guy kind of fits.
Yeah.
Because he says, oh yeah, let's put it in a structure of LLCs, and but they're talking about offshore structures, to be clear. Yeah. And he says, let's get compliant, but he's talking about it in ways that don't impede the model, but not being in jurisdictions where you have to do a lot of stuff. Just service the Americans a certain way. So
he said, Brad don't need friends. He's got us degens. I need a shirt, dude. That's awesome. Yes.
I love that, buddy. I love it.
Hey, not to be outdone by Gary Gensler, Texas securities regulators launch investigation into FTX US and CEO Sam Bankman-Fried. Wonder
who
why
initiated that.
The guy that's giving $1 billion to Democrats. I wonder why he's a target of a Texas securities regulator.
Isn't Elon Musk now a Texas citizen?
Yeah, Elon's a Texas citizen now too.
Yeah, all right. There you go.
Yeah, there you go. Not surprising.
No, not at all. But again, look, this is the way, we ought to get, Lewis's partner, Angela, she was the general counsel for Second Life in the beginning, early years. And she had to go get all those bank transmittal licenses. And she has great stories about regulation. We ought to get her on here sometimes.
That'd be great, man. You should reach out to her.
Yeah, I will. I'll do that later this afternoon. Just because, this is just, these guys are all going to get sued by everybody.
Yeah.
Or probed or something, because everybody's, got their hand out, wanting a piece.
Yeah.
So,
Sean said he pulled the $1 billion offer to the Dems. I saw that this morning, but I didn't follow up to know for sure if that had happened. But I wonder if that's a coincidence that he pulls the $1 billion offer to Dems at the same time Texas
Yeah, I
regulators.
wasn't following that story. What was that about?
Well, he was offering to. I mean, he's already funded like tens and 20s of millions of dollars of Democratic candidates and PACs, super PACs and PACs. But he was saying he was going to spend at least $1 billion this cycle, I guess, or whatever. And then I saw a headline this morning that said that he was pulling that. Sean is verifying that, but I have a strong suspicion that when the Texas regulators came knocking, that was his impetus for doing that. So thinks it's more to do with his spending spree than anything else. Yeah, I totally agree. I think he's absolutely right. This is a political intimidation tactic. It absolutely is. So anyway.
Well, also, didn't he just buy Voyager? And he dropped a lot of money on acquisitions.
I think he bought the crypto assets.
Yeah, but I mean, he's been raising money too. And I think that if I was his funders, like if I had just dropped $1 billion into his coffers or whatever, that I don't want to say, look, it's just kind of like a little too Elon-y behavior. Okay.
Yeah.
In some ways, I'm not saying don't do it, but now all of a sudden you're raising $1 billion and you're giving away $1 billion. Where's that coming from? Oh, I'm gonna, sell some
Well,
tokens.
it's his personal money, but
yeah, but I mean, like Elon had to sell Tesla shares to fund his deal. Yeah, and so the Tesla investors are all like, oh, whoa, dudes, what are you doing?
I have a feeling Sam's shit is much better together than Elon's when it comes
to
no,
I agree. Yes, 100.
Because Elon's a hot fucking mess.
Absolutely.
Let's see what else we got. Hey, anybody that wants to learn how to be a Web3 developer, I took a little journey through this as a frustrated non-developer. And this is actually a really nicely done course. Learnweb3.io. Not going to spend a ton of details on it. And by the way, Joe, I have a hard stop today at 1. I have a call in my call at 1. So,
okay.
But anyway,
I'll remind you.
Thank you, sir. And this is a really well done course. And I found it because I was on Twitter and Saturday night or Sunday night, and they were doing, this group of folks that founded this were doing a Twitter Spaces. And dude, like, they were just talking through development. It was about how to develop and what things to look for and what's needed in the space and that kind of stuff. Just kind of like a Web3 developer career 101 symposium, a bunch of people who are experienced and experts. And at the end, they opened it up for questions. And instead of a bunch of questions, I don't know how many people came up and was like, I just finished this thing. I just got a job. And this is free, by the way. There's no charge for this. It's free for the community. I just got a job. I'm just so grateful. Thank you so much. I mean, it was like person after person after person after person coming up saying, this was the best thing that ever happened to me. The community is awesome. I got a job. I'm working hard. I'm working for a DAO, whatever. So, the testimonials were really strong for this. So anybody thinking about learning how to write Solidity and write for Web3 should maybe give this a run.
Well, look, this is a perfect example for something that, look, if you're in a shitty space right now, not enough money, things are looking a little dismal, you got to educate yourself out of it. You can't gamble your way out of it. So you're doing stuff like this on the side, on top of whatever your current gig is, whether it's trading or it's, bag checker person at a supermarket, or realtor or anything. You carve out these little 30, 60-minute chunks of your day when maybe you would be feeding through your phone or watching some stupid thing on Netflix or whatever, and do this instead.
Yeah.
If you just start, you'll see that you start getting this like excitement in yourself and an attraction to it, and you learn. And then you got a leg up on everybody else at that point. So, you could skill yourself without having to go to college. I'm not saying don't go. I'm just saying, but if you miss that boat and you want to make more money and you're not already a developer, then, start looking at stuff like this because you can learn it. Anybody can learn it. You might not be the best, but you're going to be good enough. So,
well, and if you're good enough, you can make $47 million exploiting mango market.
That's like the
and this guy's now public. He's like tweeting out long threads about how it's not illegal and everything he done is legal and bring on the regulators. I don't give a shit. It's like, okay,
Well,
dude,
whoever
good luck
paid
with
that $47 million, insurance companies or investors or somebody,
No, it
they're
was the
going, oh, yeah,
DAO out
okay.
of treasury funds.
No, I know, but who's
Yeah,
the big people don't like take this kind of shit lightly. I
exactly.
mean, if you lost a bunch of money, I mean, wouldn't you want payback?
Yep. Yep.
So this is not good OPSEC for this guy. Is all I'm saying.
Yeah, exactly.
Because all it takes is one really pissed off person who lost 25 grand, and it was their only 25 grand.
Exactly.
It's the guy who loses $1 million who's got 20. You don't have to worry about that guy for the most part. So
Exactly.
I'd be laying low if I was this guy,
Yep.
because
Yep.
I'm sure there's something. I mean, just the wire fraud thing potentially stands out to me. Anytime you transmit anything, you can throw that under wire fraud. So,
well, and the
I'm sure
market
there's some
manipulation
international
stuff. I mean, he intentionally manipulated the price of an asset, right? And all it takes is the SEC declaring it a security, and he's fucked.
And one American invested in it, and then they claim jurisdiction.
Yep. And he's done.
No, I'd be
he's an
laying
American.
low,
He's in New York.
Oh, well then, party up, buddy. You're running out of time.
Get those stop tweeting and get some fucking passports, you idiot.
Yeah. I want to check out Canada about this point.
I haven't read this article, but this headline just makes me fucking laugh because I'm just a little bit. I'm like, really? Anyway.
Well, I don't know. I mean, everybody loves. I mean, I like going to Europe. It's fun.
I do too.
Particularly this type of slowness is particularly what we like about it. What I like about it.
Exactly.
So to me, I'm like, I like slow.
Yeah.
It doesn't have to always be super fast to me, but I do find the headline kind of humorous.
Exactly.
It's kind of like, it's almost like I could say European VCs start investing in typmultitypewriters.
But it's like
so long.
Right. But here's the strange thing. It's like,
or computers is probably a better word. Yeah.
Multiple jurisdictions in Europe where it's better and safer regulatory wise to be a crypto project. How are there not any big crypto funds yet? To me, it's just, I mean, I'm sure there's a few and they're exaggerating here, but it's just so strange to me that there's all this opportunity in your backyard and you're not taking advantage of it. And it's probably primarily Americans and Asian VCs that are the larger funds right now. So it's just very interesting.
Yeah, I'm surprised there's not more like economic development money in some of these countries. Like, I know there is in Singapore, but I'm thinking Switzerland, for example.
Yeah.
I don't know what they do there, but they're in a great position to like be a hub because everybody thinks of Switzerland as financial services and safe. And maybe some, well, of course, the Alps and climbing and skiing and all of that stuff too. But it has that brand already. UK, same thing. And everybody that has a brand, the London Financial Center.
Exactly.
So to me, those two markets on their own should be going all out on this, because all the other ones, Malta, Gibraltar, places like that, you're all like, oh yeah, okay, it's okay. But, when you're moving money in and out of those places, you don't think that's getting picked up?
Yeah.
When you're traveling into those places, you don't think that's getting picked up? Yep. I mean, you want to, London, Switzerland, places like that. It just seems like, why aren't the big American VCs setting up, sidecar funds there?
You would think. Here's the deal. It looks like Europe in the second quarter passed Asia by 25% and is neck and neck with the US, which is interesting. Well, now here's the thing. They're launching new funds, and in the meantime, US funds are already existing and Asian funds already exist, and they're also probably being pulled back a little bit because of the down market. So, I'm sure that's part of the surpassing.
Well, and also the Europeans have been super preoccupied over the last 8 months.
Yeah.
So dealing with energy.
Sean said, I think most native European projects never looked for VCs, mostly believe that all VCs should be strung up from the nearest tree. Well, here's the thing. There's a shit ton of activity in France, right? I mean, in terms of Ethereum development, there is a ton of activity in Paris and France. So, there may be something to that a lot of these folks just bootstrapped, took a grant from somebody and said, fuck it, I'm going to build this myself, and are just now actually getting around to needing to raise in order to get their growth where it needs to be. Right. So
yeah,
there may be some that makes sense. That makes total
well,
sense.
also it's, you got to pick the right VC.
Yeah.
I mean, the thing too is that if you go, I always advise people, the family office money, the, rich uncle money, the new VC money, it's not worth taking it because one, they're going to have crazy expectations because they haven't had any big successful deals before that. They're going to put tons of pressure on you.
Yeah.
And, and they don't have a network to take your deal to the next level. That's the most important thing. If you give up control to the VC, they better you go to Sequoia, NEA, places like that, you give up control. But man, I mean, they take you to the next level all the way up and they bring all the people for you and you get like all these other, your management team is people that exited from other successful portfolio companies of that same VC. So it becomes an anointed deal. It's almost, I mean, it has to be force majeure thing that takes it out because you just got too much going your way, unless the tech doesn't work. Now, that's the trade-off. But, the problem is people take money from these little angels and then they're trying to do something and they're getting the screws to them for $150,000 investment and they can't maneuver. And yeah, those VCs are shitty. But, if someone comes up and says, yeah, we'll give you $270 million for 75% of the company and you never have to raise money again and you can take out $25 million in cash now, and it's an anointed deal. I mean, you're not going to take that deal?
Yeah.
I take that deal every single day. So it's like,
Sean said, I think the raises, he thinks the raises are actually mostly from projects moving into Europe. Yeah. Well, those Europeans won't touch that dirty money. I got to wrap it up, Joe.
Let's go.
All right, everybody, thank you so much for joining us. Sean, Shizzy, Niblets, everybody that commented and participated today. We love you and appreciate you as much as we also love everyone that just listens and watches. Please tell your friends and family about what we're doing here. We love the discussion and we love your participation. Please, if you get a moment, please rate and review us on Apple Podcasts, Spotify, subscribe on YouTube and subscribe on Apple Podcasts and click the little bell on YouTube so you get notified when a new episode comes out. We appreciate all of you. I hope everyone had a wonderful weekend. Joe, I hope you have a great rest of your day. I'll catch up with you later on today.
Yeah, thanks, buddy. And thanks, everyone. Just want to remind everyone to check out Zero VIX. They've got some massive yields in VIX. It's a pre-mine play. You can park ETH or MAI or BTC and get like 15-20%. And then when you borrow, they're paying you like 40% to borrow. Okay. So check it out if you're interested. I'm in there, Zero VIX. And keep playing in ZK, Sync, and Shardium because I'm hearing good things there. Okay. Thanks, buddy.
r/Mission DeFi on Reddit, r/Mission DeFi.